Oh. Thank you, Venu. Thank you all for joining today to discuss on this basic fundamental principle of GST. Today, we are 6 years into this new law of GST, but we are still discussing the basic concepts, which shows that this law is not a very simple law, and it is based on laws as old as 150 years old, and it has evolved over a period of time, and it is still evolving, and it's not very simple, and we need to give a lot of time to really understand this law. So before I proceed, I would like to talk on three important topics of this new law. This new law is different from the erstwhile laws. I would say it is more sophisticated on three aspects. That this GST, an indirect tax, has subsumed a number of taxes, including octroi, entry tax. There were a plethora of taxes which it has subsumed, and it has brought the entire nation into one tax, one regime. And the other aspect, it is a destination-based tax. It has simplified matters so much that sitting in Karnataka, I can sell to somebody in Kashmir and still pay tax online, and it will be shared with Kashmir or any other state for that matter. So it is a destination-based tax. The other aspect and the most significant of all, I think, is the digital system of documentation and compliance, in which it has brought a seamless flow of credit across India. It has always fascinated me that if you don't have digital presence in GST, you cannot even have a registration without a digital presence. And that is the most significant thing, I feel, and I'm very much amazed at the way we have grown digitally and the amount of advancements that has taken place in the GST regime in the digital world. And this ensures seamless flow of credit, and the credit chain is not broken anywhere. And this has led to reduction in the total amount of taxes that has to be paid. And that is quite clearly visible from the earlier regime. And the other aspect, before we proceed into the today's topic of supply, is the tax rates are very high. I mean, for services, it is mostly 18%. And the other interest and other aspects are also very high. And therefore, one has to be very diligent and vigilant, as mistakes are very costly. And therefore, how much ever importance we give for this law, I feel it is not enough. And the system itself has become so transparent that somebody cannot push the matter under the table, because everything is digital, and even the notices and everything is put online. So there is no covering up of anything, or covering up in that aspect. So today's concept is, before even we venture into anything, into determining whether it is taxable, not taxable, the main thing, the first thing that one has to do is whether it is a supply or not. That is a basic concept, and one has to be very clear in the meaning of supply. Only then we will be able to move ahead. The others are all provisions relating to time of supply, place of supply, but the main important aspect is the supply itself. If it is a supply, then only the other aspects even come into play. Otherwise, it is out of the entire GST regime itself. So supply being the fundamental concept, and the taxable event is a supply itself. So we need to understand the taxable event, and then we proceed to matters such as whether it is goods or services, whether it is payable by a taxable person or not. So even it may be a supply, but if that person is within the threshold, then he need not even register, and he need not even pay. So the taxable event occurs only for a taxable person and not otherwise. So the taxable event comprises of supply, of goods other than alcoholic liquor, of goods or services or both, payable by a taxable person, and the 5 petroleum products are currently excluded from GST. Once the taxable event is established, if there are other ingredients, only then a levy is established. Till then, there is no levy. And once there is a levy, then we need to see whether it is intra or inter. And accordingly, if it is an intra-state supply, that is, if the supply takes place within the state, then there is a dual tax that gets triggered, which is the state and the central tax, where revenue is shared between the center and the state. So with this small introduction, let's move to the basic definition of supply itself. So the basic definition of supply is given in section 7, where 8 forms of supply are listed. I think all of you will be aware of those basic 8 forms: sale, barter, transfer, all those things. Of what? Of goods or services made or agreed to be made. Even if you agree to make, it becomes a supply for a consideration, and it should be in the course of furtherance of business. This is the basic definition. However, the section 7 has a very expansive definition, where there are other forms and modes of supply also, which are actually deemed or excluded. So we will understand those as we go across. So, but the basic definition is the 8 forms of supply of goods or services made or agreed to be made for a consideration in the course of business. These are the basic things which has to be there in order for it to be called a supply. So I pause here. I want to know if there's anything or I can continue. If you have anything to say or add, you may add.
Anyone would like to add anything here? Or Madam, is there, I have one more fundamental doubt here. Can there be any other form which is other than this 8 forms which have been listed, or everything that happens would be covered under these 8 forms? Like, say, including, so donations, definitely there is no quid pro quo. So can we say that is that's a transaction now that would be outside the levy, or that, or if you, can we say that it is not part of a form that is covered here?
No, the supply definition is an inclusive definition. So everything is included, but they have only said these forms, but doesn't mean the other forms are not included. They are also included. So everything, supply includes all forms of supply of goods or services of both, such as sale, barter, transfer. So such as shows that it's only a not an exhaustive list. It is only a indicative list. It is not exhaustive. So there may be other forms also which are also supplies. So it is an inclusive definition.
Okay, so tomorrow, if there is any other form which would be apart from this 8 forms also, and it will not be force-fitted into any of these 8 forms?
No.
Okay.
Sir, one more query from me.
Yes, sir.
Yes, sir.
There is a disposal of, madam. Disposal of. Okay.
Correct.
This is included in the supply definition.
Correct, sir.
That's definition. But whenever we close that, then we are asked to pay that amount. So is it not contradictory? There is a only, madam.
So disposal also is one of the forms of supply. The last form that is mentioned is disposal. So disposal is also a supply when it is done in the course of furtherance of business. And when you are closing the business, then also it is added because it is part of Schedule 1, where it is deemed a supply. When you have taken input tax credit on that supply, it is deemed as a supply itself.
Okay. Thank you, madam. Thank you.
Yeah. So we move to the expansive definition of supply, where 7(1)(a) says a base supply, which has the 8 forms of supply for business purpose, where there is consideration made or agreed to be made. So I made a chart so that it becomes easy for us to understand. So the first line is what I covered in the previous slide. Now we move to 7(1)AA, which was introduced from 1st January 2022 for charitable institutions, clubs, association of persons, all these, RWA, all those kind of things, where there is no business aspect. Business motive was not there. On mutuality concept, whether GST was leviable, and there was this Calcutta High Court decision, and they had to put to rest all these controversies. So they introduced 7AA, where they said any form of supply between the association of persons, even though it is not for business purpose, when it is made and consideration is in monetary terms, then also it will be a supply. So that is 7(1)AA. So now they have given exemption limits for Resident Welfare Association of 7,500 rupees. Once it crosses 7,500, we are required to pay tax. And even other association of persons, charitable institutions, when they are engaged in other activities such as renting of their premises for, say, keeping an advertisement board or keeping an Airtel mobile tower, and those kind of activities still fall under GST, and tax has to be discharged on those activities as well. The next aspect is 7(1)B for import of services. Even it may be for business or otherwise, so it is a deeming thing that even if it is not for business, you have to discharge tax on import of services. That is 7(1)B. 7(1)C is a deemed supply, where there is no consideration in certain transactions, but still GST will become applicable, and they have given few transactions in Schedule 1 where it will be a deemed supply. So that we will see in the next slide, what are deemed supply. And 7(1)A talks about Schedule 2 transactions, where the Act itself has said whether it has to be considered as a supply of goods or supply of services. So we have to go by the schedule for understanding certain transactions, like in the nature of works contract or immovable properties. Basically, supply is for movable properties only, movable properties and services. When it comes to immovable properties, there are certain restrictions and rules which are prescribed in Schedule 2, and we need to go by that. And 7 subclause 2 says activities or transactions which are excluded from the scope of supply. They are specifically given transactions which are not considered to be supply, and also activities given by central government, state government and all are not taxable. And 7 subclause 3 says that the government may in future notify certain supplies to be supply of goods or services or otherwise. So they have this, using this authority in law, they can notify in future what transaction should be considered as goods or what transaction should be treated as supply of services. So that is about 7 subclause 3. So we have 7 subclause 1A, which is a basic supply. Then we have, based on the mutuality concept, it is more of a reinforcement of whatever was already prevailing. And 7(1)B is for import of services. 7(1)C, where there is no consideration. 7(1)A for classification. 7(2) for exclusions, and 7(3) is notifications to be given in future. This is the basic framework of the section. Now we move to deemed supply, that even though there is no consideration, then these transactions are to be taxable, to be considered as taxable supply. First one is permanent transfer or disposal of business assets where ITC has been availed. Supposing I'm going to close down the business, but still I'm going to sell the goods. So you will say there is no furtherance of business in this case. But even then, if you have availed ITC, then it becomes a supply, and appropriate tax have to be paid. The second one is supply of goods or services between related persons or distinct persons as specified in section 25 in the course of furtherance of business. Then also it is to be taxed. So what is related persons is also defined. So based on the definition, we have to, whenever there is a transaction between related party, then, it becomes a supply. And principal agent, supply between principal and agent is also tagged supply. And import of services from a related person, even though there is no consideration, it becomes a supply. Apart from these four, which is already prescribed in Schedule 1, there is another deeming supply where inputs and capital goods sent for job work and not returned within the prescribed time limit of 1 or 3 years, they also become deemed to be a supply and tax to be paid accordingly. So this is about Schedule 1. I pause here. You have any questions or discussion, we can have.
Madam, some questions have in the chat window.
Oh, yeah.
Do we take up now or we'll take later?
Oh, we'll take later.
Yeah.
So that,
Okay. So anyone to comment anything on the deemed supply?
Not on the deemed supply. Regarding the previous chart, if it is, can be taken up now. So,
yes.
Ma'am, here for mutuality 7.1 clause AA, you have marked that regarding consideration in the bottom of the chart, you have said monetary only. But the section says or any other valuable consideration. So will that be, it says cash or deferred payments or valuable consideration. So is that valuable consideration we are considering monetary only because it is preceded by cash or deferred payments, or valuable consideration can be expended to any other things besides monetary consideration also, please?
Yeah, I felt that it was more related to money and money related consideration and not, exchange. I don't think they are talking about exchange by the wordings of that subsection.
Yes, okay, fine. Thank you. Yeah. Sometimes the color is taken from the words preceding, etc. So that is your view. Yeah, fine.
Yes.
Thank you, ma'am. Thank you, sir.
Yeah, madam, one more point in 7.1 AA. So the government has taken extra precaution and they have used the word activities or transactions.
Yeah.
So they would have definitely envisaged something would be missing and they would want to cover it.
Yes.
And especially for the mutuality, if I say the simplest thing, including resident welfare associations, they would also, when there are festives happen, for the common benefit of everyone. So people also pool money. Let's say even they're placing a Ganesha idol, and on the 11th day or whatever the day, they are also arranging food for all the members. So again, it is all pooled mutual.
Correct.
Now, activities of these are also now included. Per se, I would say that this is not a transaction, but this is an activity. So even those would get now covered.
Yeah, I mean, it would be covered, but I think all transactions in monetary terms alone will be covered under this, is what I felt. Reading the the plain section, because it says activities or transactions by a person other than an individual to its members or constituent for cash, deferred payment, or other valuable consideration. So prasadam may not be cash, deferred payment, and other valuable consideration. So on that perspective, I feel it can be restricted only to this. But as you said, when they say activities, it means any activity. It could be any activity or transaction. So they want to cover everything that happens in an association of persons. And the main aspect is not for business. It is very clear that even though it is not for business, it's going to be considered as a supply. So therefore, that being the case, we need to be very careful. We need to really see whether if we are falling within the scope of supply, and accordingly, do the taxation on that.
Yeah, if that being also the part of the scope of the supply, then I think we should advise them to avoid litigation in the future, not to route through the association.
Correct.
Yeah.
That is very much true. Because see, supposing if you look at it, one example I can tell you, where like an association like our Chartered Accountant Association, they may arrange trips where the conference may be held, where they do
Right.
a group booking of all the tickets. What happens in that case? They collect all the ticket costs from from all the members who pay, but the GST liability is already fixed, that you cannot say that I'm going to be reimbursed for the tickets alone, and then I'm only going to collect a separate conference charge for the conference. So
Right.
everything is booked. Supposing you take 1 lakh rupees for a conference to be held in Australia, then on that entire 1 lakh, you have to pay the GST of 18%, right?
Correct.
So it is better that the bookings and other things are kept outside the association, and only the conference charge alone is collected. So you need to be very, very careful whenever you are planning such events and through the association.
Can I ask one point?
Yes, sir.
This is Praveen from Ahmedabad.
Yes, sir.
Do you see any difference between explanation 3 in the Finance Act 1994 Service Tax, where the Supreme Court has rested the case, and AA presently, which is incorporated in GST? Do you see any difference between these two provisions?
So definitely 71AA will prevail over whatever was stated in Finance Act as part of the erstwhile Act. Now
No.
has
I am not on that point. Drafting may be slight changed, but as per limited view, explanation 3 to section 65B 44 and now 7AA is more or less similar. They want to cover earlier also, and they did in GST also, but explanations 3 was rested permanently, and whatever litigations they have been closed, refunds, whatever taxes have been paid, those are refunded back to the clients at majority level. So I want to ask a simple question. Do you see any difference between explanation 3, wherein they have attempted to tax mutuality earlier also 3 times? Now they are attempting same thing in GST. Only limited view I wanted to know. Do you see any difference between these two provisions?
I don't see, sir, because it's basically the same.
Okay. So if that is the case, then if that is the case, that is rested, then 71AA seems to be tested by courts again, and it has to be rested again for the point. Here I would like to add one more point. In Schedule 2, they have deleted entry 7. Right. In Schedule 2, they have deleted entry 7. If I remember correctly, I don't remember the article, but after Gannon-Dunkley, there is a provision in Constitution to tax deem supply. Right. So under deeming fiction, they were taxing goods. That entry is standing as on today also. That entry is not amended. In spite GST has been introduced through different articles. That provision is not deleted. And entry 7 to Schedule 2 has been deleted. And just by making a definition wherein I want to tax, they are doing this thing since many years, and they have tried since 3, 4, 5 times. So if your views are clear that explanation 3 to 60 by B44 is similar to 71AA of GST, then I think we are on the same page that under the concept of mutuality, tax cannot be levied for the transaction between clubs and member society and welfare association and chartered accountants, ICI and its members, or any other such type of arrangement. If you are of the same view, then you may please continue, or I would like to have input on this.
Yeah, sir, always two views are possible, and we have always seen department canvasses one view and we have always taken the other view. So when that things are possible, it is always litigative and it will always find the test in the court. So that is what we are seeing also. So that will continue. I mean, this is the way, the act is also structured, that multiplicity of views are possible for each of these aspects. Right, sir?
Yeah. Thank you. Please continue.
Yes.
Madam, your schedule 1 item,
Yes, sir.
Siddheshwar here from Bangalore.
Yeah.
We have that entry permanent transfer or disposal of business assets
Yes.
where ITC has been availed.
Correct.
There will be a situation where I have transferred the assets. Okay, it
Hmm.
is a deemed supply, but at the same time, I receive a consideration also. So, how do I go about when there are two supply entries happening? One is because of deemed supply, but parallelly, we have a supply of that assets where I'm receiving a consideration. I would have scrapped that. So, how do I
Correct.
go about paying the tax? Whether I compare that ITC method and this, or go about as a regular supply, pay a tax on the consideration basically.
So we need to see the rule and the facts of the case. The rule is prescribed, I think, for this, how you need to calculate. So we need to go with the rule.
But do I go by ITC method or the consideration which I have received? Because I have received consideration on making supply to a third party, where I have received by way of cash or bank check. But it is permanent disposal where ITC also has been availed.
Correct, sir. Every situation it is like that, no? Disposal of assets. But when consideration is received, I don't think you should use this, because this deemed supply is only when you have not received any consideration. Is my understanding right, Venu? You have to say anything.
You is correct, madam. I'm Paul Sangam. See, only when consideration is not received, then we will be coming to deemed supply. So, deemed supply covers the cases where there is no consideration. So, what is the taxation going out for there is no consideration, only the deemed supply has been brought in. So, when there is a consideration, it will prevail over this deemed supply as per schedule.
Correct.
This is my view.
Section 18 will also come into the picture.
Yes. Correct, sir. Yeah. Shall we proceed?
Okay, ma'am.
Yeah. So, as I said, the base supply gives, 8 forms of supply of what? Of goods or services. So, goods means every kind of movable property. So, this GST law and supply is more related to movable property other than money and securities, but includes actionable claim, growing crops and grass, things attached to and forming part of land, which are agreed to be severed before supply or under a contract of supply. So we have seen so many case laws, even an actionable claim, there's been a whole lot of activity going on in GST regime under the actionable claim. New section is also being brought in to tax this actionable claim, though currently it is excluded in Schedule 3. The definition is pretty straightforward. It is for movable property other than money and securities, but includes actionable claim, growing crops and grass, and things attached to and forming part of land. So if you sell land, it is not a supply because it is a immobile property. But if there are crops and they can be severed and supplied, then it becomes a supply. So that is about goods. And services is an inclusive definition. I mean, anything other than goods, money and securities is a very wide definition, that everything else other than goods, money and securities will be services, but includes activities relating to the use. Even in money and securities, if you are going to do the money exchange transaction, even that will be covered under services. So services is a much wider basket and includes many more activities. So anything other than goods becomes services. So that much of a wide definition they have given for goods and services. So any discussion or any thoughts on goods and services?
Madam, so last point, one affirmative thing. So can we say immovable property is a service?
Immovable property is?
A service.
No, we cannot say that. Right? I mean, immovable property, certain transactions are given in Schedule 2, where they have classified it as a service for specific purpose, like you are renting your immovable property, then it becomes a supply, not otherwise. So they have
No,
given...
no, I'm not asking whether supply or not. Though sale of land is a state subject, and which definitely needs an constitutional amendment to bring the under the ambit of GST. But when it is brought under the ambit of GST, would it then take the coloration as service and get as a levy, or then should they need to include one more category other than goods and service to bring it to levy?
I think they have to bring another thing altogether, because it becomes very absurd to say sale of land as a service. So it cannot be that they can do that way. They have to have another category for immovable property as such. So
Okay.
I don't think they can include in service.
Okay, good.
So actionable claim is, no, sorry, now we move to consideration. So consideration means something in return for the supply. So it can be the payment made or to be made in money or otherwise, in respect of, in response to, or for inducement of, for the consideration. And it can be by the recipient or by any other person. It need not be from the person who took the goods. It can be from any other person. It can be a monetary value or a forbearance, that you agree to do certain thing, or you stay away from doing something, even that becomes a consideration. But it is specifically provides that subsidy given by central government and state government does not form part of consideration. So any question on consideration, which is also one of the ingredients for the taxable event?
Here in the consideration, the differentiation where we say donation is not a part of consideration for taxation, they use the word grants also. Is there a difference between a donation and a grant? And will it form as a consideration? If grant also, does it form as a consideration for purpose of supply?
So donation is voluntary. It need not be fixed. It is at the discretion of the person who's giving. Grant, on the other hand, if you see, it is for a specific purpose. An amount is being kept separately for the purpose of some given to be for a particular purpose. Let's say a sponsorship kind of thing. So more or less, it is not with a business orientation. And therefore, if it has to be included in supply, then it has to be, come under one of the schedules, the schedule 1 or 2, where it is treated as a supply. As such, donation is not a supply, but in certain circumstances, they can become a supply. Supposing your business assets, you are giving as a donation and you have availed ITC on it, then in that case, it becomes a supply. Correct or no?
No, if they give a donation saying that if you don't utilize it, you give it back. They give conditions when they give this grant or donation. If you are not utilizing the fund fully, then they say the differential amount you return it back.
So
then
when it is in the form of money, then it is not a supply, because goods does not include money. Correct?
No. Not that way. They give a donation saying that you do a particular activity to a trust. So the trust will do an activity for which a third party will give a donation. So consideration can be given by the recipient directly or through a third party also,
Correct.
right? So when a donation is given by a third party saying that you use it for a particular camp, I camp, and if the fund is left over, you return that back to the person who has given the donation. So that differential amount, because is given with the condition, will it still continue as a character of donation, or will it change into some other form?
Yeah, because donation is voluntary in nature, I don't think the color of the donation will change because you are asking some portion of the unutilized amount back. Venu, you want to add anything to this?
I would like to add on here.
Yeah, Praveen.
The gentleman who is asking the query is in relation to donation or grants. I think there is a clear-cut circular on this, and the definition of consideration includes any money received from government only. Donation is altogether separately distinguished. That is not covered under the part of this shall not include subsidy given by central or state government.
No, we are not on
So there
subsidy.
is
We are not on subsidy.
there is a there is a clear-cut distinction between a donation and a grant.
Grant need not be from government. Even other people can give. Not necessarily a government should give grant.
Correct. But the grant by government is only excluded. That is
Subsidy is excluded, agreed.
I want to just highlight. Notification 39 number is there, where government by grant has been excluded. Definite, it is in the list of exemption.
We are not on the point of government. I think we have some connectivity issue there. Madam, you continue.
Yeah. So now we told that goods includes actionable claim, but I mean goods other than actionable claims. Goods does not include actionable claim, but the and the actionable claim has been excluded in Schedule 3 as well. But department wants to charge GST on specified actionable claims. So this section has been introduced with effect from 18th August 2023, where another subset of actionable claim called as a specified actionable claim has been included, and anything by way of betting, casinos, gambling, horse racing, lottery, and online money gaming will be included, and they will be taxable, and they are not part of Schedule 3 activities. So we had this recent online gaming with Gamescraft case going on that precedence. Department has the GST Council has deliberated and included a separate subsection in the definition on specified actionable claim, which will be, it is not yet notified, but once it is notified, all these transactions will become taxable. So then we move on to Schedule 3 activities, which are exclusions from supply, which is employer-employee activities or transaction between employer and employee, services of a court or tribunal, actionable claim other than specified actionable claim is what is added, but not yet notified. That's why I highlighted in blue. Sale of land and sale of completed building. But and it says completed building only. If you are taking money before possession is handed over, or possession certificate is not given, then it still becomes a supply and chargeable to GST. And supply in merchanting trade transactions, that is, the goods doesn't touch the Indian land at all. It is between two different countries. Supposing supply of goods from China to USA, where the goods don't touch the Indian custom frontiers, then it becomes an exclusion from supply. And supply on high sea sales and supply of warehoused goods before it is cleared for home consumption, all these transactions are excluded from the scope of supply in Schedule 3. I pause here. I want your comments.
Yes, ma'am. I am Tarang Kothari from Ahmedabad. I
Yes,
would
sir.
like to please throw some light on sale of leasehold land, leasehold rights, because there are so many notices are coming nowadays for GIDC or industrial park leasehold land. So whether it can we consider it is a sale of land or sale of rights, and it will be included in the supply?
Sir,
Can you please elaborate? Yeah.
so can you throw some light on how the lease rentals have been paid? And I mean,
General,
it is not a ownership, right? You only have a right for a certain period of time.
Actually, generally, this GI Industrial Development Corporation, they don't sell the land. They generally give this land on lease basis, and that is for
Correct.
99 years lease. So it is akin to sell that entire land has been given for 99 years lease, and the entire consideration of land is taken as a premium or salami at the beginning or at the first instance, and there is meager rent is required to be paid during the tenure of the lease. So
Yes.
entire consideration of land is already taken at the time of first transaction or transfer of lease right.
Correct.
So how this transaction, because what is happening that second sale, when leaseholder can sell this leasehold right to another person, that is permissible with the payment of GIDCs or Industrial Development Corporation fees. So
Yeah.
will that second sale be considered as sale of land or sale of leasehold rights and covered under the GST?
Yes, sir. It will be definitely a sale of service as per Schedule 2, where it says leasehold rights are, are a service, and it is not a ownership, or the title in the goods does not pass on to another person. It is for a limited period, and you have a right to use a property. So it is a service, and the transfer of such of rights will definitely be liable to tax, and it will not be falling under Schedule 3, definitely. Any other has a different view can let me
Yes,
know.
but madam, what will happen in that case? The total consideration what is being charged by the Industrial Development Corporation, that consideration is always attracts the local levy, the stamp duty and all that. So how will it not be considered as a sale of land and long-term lease is because more than 30 or 15 years lease is considered to be a sale in general, and the entire stamp duty is collected on that amount also.
So because entry number 2 in Schedule 2 says any lease, tenancy, easement, license to occupy land is a supply of service.
Okay.
So that being the case, I don't think we can take shelter under Schedule 3 and say that it is a sale of land. It can never be, you can never prove it as a sale of land, in my view.
Ma'am, I would like to add or clarify the position of what Tarang is telling. What is happening is there is a sale of lease of the issue is not in relation to lease rentals.
Yes.
What is happening is Industrial Development Corporation of any state, they are giving a particular piece of land to particular buyer on long-term purpose for particular purpose, means particular industry have to be established on that particular land.
Correct.
At later on stage, what is happening is that first buyer is transferring the property to second buyer with a prior permission of in Gujarat, that is Gujarat Industrial Development, GIDC normally we say, that is with the prior permission of GIDC, on which transfer fee of GIDC is also payable. However, after the period of 30, 40, 50 years, the original price of lease on which he has acquired the property has raised manifold.
Exactly.
So the question here in DGGI which I have raised is that the second buyer is paying a premium or a lump sum to first buyer to acquire the rights to use that property through GIDC for a particular purpose on a long-term basis. So issue which DGGA have raised is GST levy on that one-time premium paid by a second buyer to first buyer. It is not in relation to lease rental. It is
Yeah,
in
but it is
relation to
actually
one-time
for
premium.
Yeah, but he's transferring the rights to the other person for that, and the consideration is the premium, isn't it?
Yeah, that is a question DGGI is raising in relation to levy of GST on a one-time premium paid by a second buyer to first buyer.
Correct.
Subsequently, lease rentals are payable and subsequently one-time transfer fee payable. The issue is not on that portion.
Yes.
Issue is only in relation to one-time payment from a second buyer to a first buyer with prior permission, written approval from the industrial development. The issue is in that relation.
Yes,
The
sir.
premium, what is been defined in the notification itself.
Yes, I understood your question, sir. Sir, if you can have your email ID, I think there was some circular that was issued. I am not very sure. I need to do some research on this. I will check up and I will send you an email, sir. If you can share your email
Yeah,
ID.
I can share you in the do I need to send it on a chat box?
Yeah, you can send it on the chat box.
Okay.
Yeah, I'm giving it right away.
Okay, I will also send.
Praveen will make a write-up and then we'll discuss it offline.
Yeah. No issues. Please continue.
Yes, sir. Thank you. And we move on.
It will be second, it will be taxable, madam, because of that only they have given an exemption in the notification number, madam, 41. Serial number 40, the notification number 12/2017. They give first buyer exemption. For the second person, the exemption like that. So it will become taxable for the second person, but not to the first person.
Correct,
So
because it is directly obtained from the government. And also, if it is a SEZ land or a, for wholly for export or import purpose, then also you can get some exemption. But being a normal DTA, domestic tariff area, I don't think you can get any exemption. But we'll definitely revisit this because the premium amount will be quite a lump sum amount and the amount of tax will be huge. I understand that.
Ma'am, I would like to add one more point in your study. Please also look to the point that this transfer of money is known to the Industrial Development Corporation.
Yeah.
I am talking and highlighting only on the check payments. Cash, we are nowhere concerned.
Yes, sir, I understand.
Whatever
because you
amount
cannot,
is,
I understand that you cannot transfer the leasehold rights without, the confirmation or the approval from the owner of the property, which is GIDC.
correct. So you also make a study on a point that the sir just now he spoke that there is an exemption to first person. There is not an exemption to second person. That is interpretation of DGGA at large. However, this is my personal view. People may differ that the property is constructed once. It can be sold many times. 100 number of times it can be sold. If I am selling that land directly to the second buyer and second buyer is getting the lease deed registered with GIDC, that would be a separate case. Herein under, GIDC is not acquiring back the right of the property and giving it back to the second buyer, but transaction is in the same nature wherein prior approval of GIDC is required. Hence, my interpretation is even second person is a first person. The transaction of money or premium is only done between buyer 2 to buyer 1, in which GIDC is nowhere concerned.
Yes, agreed, sir. We'll look into this.
Yeah, please. Thank you.
Yeah, we next move to the next aspect of business, which is also one of the ingredient for the supply. So the usual expected business activities which are listed under the section are trade, commerce, manufacture, profession, vocation, adventure, wager, and other similar activity or any activity incidental to the above. There is no requirement of any volume, frequency, continuity, regularity. It can be a one-time activity as well. and includes activities relating to commencement and closure of business. So, as Paul sir had earlier asked whether disposal of activities constitute business, it does, because it is clearly given includes activities relating to commencement or closure also. So that is the common understanding. There are some unusual activities which are also included in business. Provision of facility by a club or association to its own members. So concept of mutuality is also included as a business activity. Admission to a premises, maybe, fee collected for admission to a premises. Service charges for holding office in the course of business. Race club activities and government activities are also classified as business as per the definition. So this is about business. I pause here. I would like any comments or questions. This is there in the definition of business itself. So all inclusive definition.
Here again, Paul, includes activities relating to commencement or closure of business. Okay. Suppose
Yes.
a proprietor engaged in jewelry business, and then he is contributing his own accumulated gold, say 1 kg. Then will it be business?
Yeah, you are called. That is an investment of your own gold in the business.
Yeah.
No,
He is
but
the proprietor.
correct. But that is a contribution, right? That is an initial contribution that you are making from a personal position to the business. So there is no supply from the business to the personal. Only the other way around GST is applicable, not this way. When you are contributing, there is no GST liability. Correct?
No, because amount will be more than 20 lakhs or 40 lakhs only in goods. So the proprietor contributing the capital, because the business includes activities relating to commencement. That is the query, madam. Commencement.
That is true, sir. But the proprietor and the individual, they don't have any separate recognition. It is a one PAN for the person as well as the proprietorship. There is no two PANs. If there are two distinct PANs, supposing the same person has taken a partnership firm, then I agree with your view that yes, it becomes a separate two distinct person and there is a transaction. But proprietor and the self is the one and the same. So they cannot be a tax to myself. It will become absurd, right, sir?
Then the same logic, will it not applicable to closure of the business of a proprietorship person? That is the question.
No, closure of the business is when you are, if you have availed ITC, then you pay back the ITC. That is what because it is clearly given in Schedule 1 where it is deemed. There is no consideration. It is deemed. Therefore, you have to consider it as a supply. And only there is a conditional deeming. That too, if you have taken ITC on that, only then, not otherwise. So that is different and this is different.
Madam, it's 9:57. So
Yes,
how
sir.
do you will go ahead and complete or we'll take it to the next week, ma'am?
So as you say, sir, we can do both ways. We can take it next week also, if you feel.
Yeah, so that we'll just keep it at 10. And maybe you can take a logical conclusion and we'll take it for the discussion the next week.
Yes, sir. So today we only completed, the basic ingredients.
Correct.
There are other aspects to this where we are going to check on the other transactions where it is related to the supply, which we can revisit next week. And I will just
yes.
See if there are any questions which we can take. So there's one question with production linked taxation and place of supply other than recipient as per section 12. In some cases, can we still say that destination based taxes should be go away using? Yeah, there are more and more cases where it is no more a destination based tax. So we can stop using that, though I said this in terms of the ease in the way we can conduct our business, where it is, there's so much of ease in doing business that we don't have to take registration in our 28 states, and we can still continue doing supplies and paying an integrated tax, where the sharing of taxes happens in the digital portal. Does taxable and exempt supply words to be used contextually, or one is a subset of others? This we have, we'll be discussing in the next week, where I have discussed specifically non-taxable exempt supplies. We have a slide exclusively for that. We will take it up then. Joint development would be regarded as exchange or barter. Joint development is when two people, one give the land and one do the surveys. So it is not an exchange or a barter. It is a separate joint venture, I would say. And it's an association of persons. Is there a difference between donation, grant? Oh, this is already answered. So with this, we can close. I'll just note down the email ID alone.
Yeah. I will share them, ma'am. The materials, I will share it to the group.
Yeah. No, and the email ID, you can copy it and send it to me. They had one on the lease question. We need to answer that.
Right. So I've asked Praveen to put a note on the question. I will share that question to you, ma'am.
Yeah,
Yeah,
sure.
it will be done. It will be done. No issues.
Okay, sir.
Okay.
So let's take it from the next week.
So one moment, ma'am, just be there. Friends, it is an occasion to also congratulate and appreciate Sujata madam. She has become Karnataka State Chartered Accountant Association President. So it's a 50 decades for KCA, and madam is the first woman president. She is here amongst us. So I take an opportunity to congratulate madam for this achievement, and I know it puts a lot of responsibility on her, and it just shows that okay, she is capable and she has taken up that. Thank you for being here with us, madam.
Thank you so much. With all your support, I'm very sure I will be able to deliver my best. So looking forward for your support.
Yes, ma'am. Thank you.
Yeah.
Madam, some few words before we conclude the session and continue in the next week.
Yes. Yeah. See, this GST study group, faculty group has been, wonderful learning for all of us. And with the strong support of our Venu and Unni and, other members in this group, key people in the group, Arup. And I should also mention our, my friend, I think he has joined today with a different name, Kuldeep. Arpit. Yeah. I wanted him to.
I joined that.
Yes, I saw you. So with Arpit, the sessions are going really wonderful. It's a knowledge, enriching session. I request all of you to, continue to support the session by, support the speakers by joining on time and add a lot of value to the session and be participative in each session. And with respect to today's session, I thank Soumya for deliberating on one of the key, sections of GST, which is section 7 supply. It opened up a lot of, issues with respect to supply. Basically, whether do we need 2 persons to make us, conclude that it is a supply? Do we need a single person, or do we need a supply to be fulfilled? Do we need 2 people? Or it's just with 1 person, is it supply will be fulfilled? That is question number 1. And second, what happens in case of discontinuity of business by a proprietor? And also the long-term lease, whether would it be a supply long-term lease when it is transferred to the another person, will it amount to supply? And the fourth, very important, is that when would it be called as a consideration, whether donation, just receiving a donation from any third party for some specific purpose, if it is not fulfilled, will it amount to supply or not? So these were all the open-ended questions which are lying as on today. I think the speaker would do some research and come back to us with the wonderful research on it. I thank all participants for joining this session, and my sincere thanks once again to the pillars of this group. And I request all members to be very active, and whatever way possible, please continue to contribute. Thank you for the speaker. Thank you so much.
Thank you, madam.
Yeah.
And friends, again, we will assemble back next week. The same topic will continue. So you come back with more questions. Now, Soumya madam has opened different points to ponder for us to think on it. Yeah. Arpit bhai, anything before we conclude?
Yes, Venuji, first of all, I would like to thank the speaker to have taken up the smallest of the sections, but which have the Pandora boxes of questions. And,
yeah.
and the queries which have come from the members are really thought-provoking queries. And I would also request all the members to put in their queries in the group also, so that all the participants who would be coming into the next session would be having their views upon on those queries also, and we would have a session wherein all the views would be coming, and then maybe if possible we can have a common view of the group on the particular queries. Like one of the queries which was raised regarding the GIDC matter, it is a very valid view which has been given by Pragati, and all the members, if they can give a thought upon that, we would be having a great discussion coming up next week. And once again, thank you to the speaker for the eye-opening session. And as always, all the speakers who have come up till now have given their best, and request all the participants to engage much more in these discussions.